Welcome to the RJLT Economics. In this podcast, I try to answer the question, will China's real estate bubble burst in 2022? I want to develop today's podcast in 3 steps. First, I want to discuss very briefly 9 factors that affect housing price, particularly in the Chinese system. Secondly, I want to point to 3 risk factors that we need to take into consideration. And finally, I want to unveil my answer to the question of today's title, which is whether the bubble will burst, and indeed how I think it will burst. Now let's go with the first step, which are the 9 factors. There are, let me count, I've written them down. I think there are 1, 2, at least 3 factors that suggest that the price should come down. And there are 4 factors that would push up the price. And there are 3 more ambivalent ones. Wait. This doesn't make sense. 3 factors that will push up the price. Sorry, I counted incorrectly. So it's 3. Let's start with the 3 factors that would suggest that the price should come down. First, there's supply and demand. Obviously, we know that there is severe oversupply of residential housing in China. So absolutely, that is a factor that should push down the price. In fact, severely push down the price. Secondly, there has long been the argument that residential housing is a means of investment. It's a vehicle of investment. This is not true in my judgment, because in fact it is a consumption. It is a way. It is a vehicle of consumption, right? Throughout history, housing had always, not always, but for the most part of history in China and also in the rest of the world, housing has been a commodity that you consume. And old houses don't fetch high prices. And housing has been mostly affordable, and people move from one place to another depending on where they secure a job. Not necessarily because they purchase a house and they get tied to it and have 30 years, 40 years of loans, of mortgage to pay just because it is an investment. It is not an investment if you have to pay, if you have to sacrifice so much, right? The price maybe after 30 years could be higher. Maybe this is a big question mark. But this does not mean that it overall is a good way to actually tie yourself down. And housing prices have been going up only in the last few decades across the world because of the monetary financialization of the global economy. If we look at the housing market before World War II, before the decoupling from the gold standard, housing has always been a commodity that depreciates over time, not something that goes up in price over time, because the value actually comes down. So I think if we look at the investment properties, I think that's an argument that prices should come down. Then thirdly, there is the demographic problem, the population problem in China. And that basically means that as the median and average age of the population go up, as the pyramid reverses, as the population declines, price, the supply of demand, the relationship between supply and demand actually goes even deeper into in favor of demand, of decline in demand. So that basically means that price should also come down. These are the three factors. Then there are three factors that like to push up the price. One, there are the banks. These banks, they make a lot of money from mortgages. In China, the mortgage rates are very, very high, a lot higher than it is the case in the Western economies, even though housing has been one of the least affordable things that you can purchase, right? If you want to buy food, clothes, electronics, even cars and energy products, utilities, overall, these things are cheap compared to the Western economy. Perhaps not in terms of luxury cars, but almost everything else is cheap. The only exception is housing. So it's really not affordable. But banks love that. Banks really love that because on top of the high price, you charge a high mortgage rate and you extort people for 30 years loans. That basically means that you can enslave. Every time you issue a mortgage, what you do is you enslave a family. And so, of course, the banks love it. Secondly, the government love it. The government overall loves it. Not only does rising housing prices push up the GDP, but also it allows these governments to continue to sell their land to developers, real estate developers. And this is a major part of the government's income. So they love it. They want it to continue to go up. And thirdly, there are a lot of people who have already purchased their houses, and especially people who have just purchased their houses. They have paid 30%. I don't know what's the average now, but maybe let's say they put down 30% down payment. And now they have a 30-year mortgage, and of course they want the price to go up. When the price goes up, they feel that they're wealthier, they made the right choice. If the price comes down, and if the price comes down by 30%, oh my God, their equity becomes negative in the house, and that could be really, really bad for them, right? So they don't want these people. They want the prices to go up. But these, I have to say that the banks, the government, and people who have purchased houses, all of them are not really market factors. These factors are just wishful thinking. I include these factors in this discussion because I see them being raised by a lot of people who discuss housing prices in China. They say, the government would not want the housing price to come down. Banks would not want, and people do not want. Okay, they don't want, but are the banks going to buy the houses themselves and push up the prices? They're not going to do that because they don't want to take that kind of risk. And I think it's not even legal for banks to go directly to purchase houses themselves. The government, yes, they want it to go up. What can they do? Can they point a gun at the working people and say that if you don't buy a house, I'm going to imprison you? They can't do that. Right? And finally, people who have already purchased the houses. Well, these people have even less tools, fewer tools at their disposal. They have already basically taken on the debt. They have 70% of their houses that they need to pay back, right? So they now, in fact, if we look at their personal wealth, their net wealth is negative. They are indebted. These people are not going to be able to purchase another house in order to push up the price. So these three factors actually don't really matter. Then there are three factors that are somewhat neutral, right? One is interest rate. Interest rate, I say it's neutral because as the Federal Reserve starts to hike or marginally increase its funds rate, the mortgage rates, I think, in the West, especially in the United States, has risen dramatically. And this basically has actually widened the gap between has actually closed the gap, right, between interest rates between China and the United States. But that's actually at the same time as China has been practicing this irrational, I would say basically economically irrational policy of lockdowns. Economic contraction is a real thing. Unemployment, it's a real thing. A lot of people cannot afford anymore to pay their mortgages. A lot of people are defaulting on their mortgage payments. A lot of people have stopped paying their mortgages. And I think this will continue. This will worsen because the Chinese economy is not really doing very well. And so it's more fundamental things. The Chinese government wants to lower rates, cut rates. They want to print money. They think that this will be able to stimulate the economy. I have said many times on this podcast that monetary policy cannot stimulate the economy. Fiscal policy perhaps can stimulate the economy, but only in certain situations, right? So just by flooding the market with money will not help housing prices. In fact, as inflation goes up, people need to spend more of their already diminishing income, disposable income, on food, on energy, on utilities. That means they have less money to speculate on the housing market. So that's actually not necessarily a good thing. But on the other hand, if they increase the interest rate, if the mortgage rates goes up, that also is bad for housing prices. Basically, when you reach such a point that bubble is so big that it becomes a heavy burden on the economy, well, it's very difficult to sustain the bubble. It takes a lot of skill from the policymakers to keep the bubble inflated, and that's very difficult. The second issue that is somewhat neutral is the argument of urbanization. Basically, here is saying that the urbanization rate in China is still lower than that in the developed economies. As a result, housing prices will go up. This is not really true because in cities, there are already enough supply for 100% urbanized China, right? So just a little bit further in urbanization does not mean that there will be increased demand. Yes, there will relatively be, I take that back, right? There will relatively be an increased demand compared to if there is no urbanization, no further urbanization, or if there is a de-urbanization. But when supply is enough, such that even with this increased demand, supply is still more than the demand, this increase in demand is not really an argument. So I think this is neutral. Let's say it's neutral, right? It's not something that's going to push down the price, but it's not going to push it up. And finally, there's the argument that a lot of industries will be implicated. Oh, well, yes. And a lot of industries will also be implicated or affected negatively by lockdowns. Now, will there be no lockdown? Not really, because, the interests of the industries are not what is going to determine eventually the market. It is rather the market that determines the interest of the economy, of the industries, right? Just it's not because you can't say that, okay, I've started a company that makes electric vehicles, and well, for my interest, there must be a great increasing adoption of electric vehicles. Not really. Why should there be, right? Some of the industries, there are these small investments, right? When financial resources are misallocated, these industries can experience difficulties. They can deleverage. A lot of the factories can close down. A lot of companies go bankrupt, and overall, the market will correct the mistake that has been made. So that is, again, not an argument, but of course, I'm not saying that this is an argument against increase in housing prices. So as I say, as you see, I list 3 reasons where housing prices will come down, and these are market factors. I list 3 kind of reasons or factors that should push the housing prices go up. But these, as I said, are not market factors. They are wishes, right? They are wishes of granted important players, important stakeholders. But I think these, after all, are not the market. And finally, there are 3 kind of market factors that are somewhat neutral. So this is a general background. Now let's move on to the second step. So let's talk about 3 risks for continued this bubbly residential housing market in China. Risk number 1 is if and when there is a military conflict or military operation involving the United States or its allies there could be a sudden, uncontrolled collapse in the housing market. And this could be very, very, very bad, right? So this is a risk. I don't want to develop on this. Second risk is that sales can stagnate, right? Because when price has reached such a level that it's very difficult for a lot of people to afford housing, but at the same time, rent is rather cheap, right? It takes in a lot of the big cities, it takes if you purchase an apartment, the purchase price plus the mortgage that you have to pay back, it equals over 100 to 150, even 200 years of rent at the current rate. Does not make any sense to not rent, right? The only reason that these people are still buying, of course, is having falling victim to the idea that, if you are paying rent, then you are paying for someone else's house. But if you buy a house yourself, even if you pay more, it's something for you. Well, it is not something for you, because after 50 years, after 70 years, after 100 years, you will not be here. And it doesn't matter what you have paid in these 50, 70, 100 years. So that is something that, of course, I want to point out. But anyways, as sales stagnate, what's going to happen is that even though the government may be able to control the housing prices such that it does not come down, as people's living standards decline with these lockdowns, with economic difficulties, with possible military conflicts, and with the deglobalization, of course, people will purchase less, and so there will be some freeze in the credits, right? A lot of the debts that had been raised by the property developers, a lot of them will not be paid back, and that will trigger some financial difficulties, not dissimilar to a decline in housing prices. So what basically this risk is that if you keep the price at the current level, but the market demands a lower price, what you are actually going to do is that instead of keeping the price as is and keeping the market as vibrant as you wish it is, what you are actually doing is taking away the volume. So you have the price but no volume. People are not actually doing real estate transactions. That's basically what could happen, and the effect is not much different than a decline in housing prices. And finally, there is the risk of inflation. As I said, that the Chinese government, there are some signs that it really wants the Chinese yuan to depreciate, right? They want to print more money. They want to increase the competitiveness of its industries. But I think these are not really going to help the economy very much. I never think that a weak currency is good for any economy. This is a ridiculous idea that has been argued by some people in the last few decades. I strongly disagree with that. Right, as we all know, the United States at the end of World War II, I think had, I don't quite remember, 70%, I think that's the number, of the world's industrial output. At that time, the United States also had the world's largest collection of gold reserve, and the US dollar was the strongest currency. So it was a strong currency, very strong in industry, great surplus, trade surplus. I don't see any problem with having these combination of strong industry, strong trade, and strong currency. These things don't contradict each other. Rather, I see a lot of countries, right, and these countries are failed countries that have high inflation, high low standard of living, declining morale, disintegrating society, and of course deindustrializing. So that these countries, right? So basically, what I'm saying is that there could be some people who have been maybe educated in some of the institutions that promote the current stupidity in economics, which suggests that you need a weak currency to promote your industry or whatever. There could be, I think there could very well be a lot of push for devaluation and hyperinflation. But one thing, high inflation, hyperinflation, if you want a way to destabilize your society, if you want a way to lose your administration, let's call it beautifully, right? Or if you want your regime to really fall, to collapse, well, that is one good way to go about doing it. But anyway, these are the three risks related to the housing market. I think these are the real risks of if there are more attempts to control the housing prices. Having said that, let's go on to the last part, the third part. And this is when I answer the question, will there be a bubble burst? I think actually no. I think the good Chinese government will try everything it can to keep the bubble up there, right? Because as I said, the market really if the market is in control, if it's a market economy, the price should have come down several years ago, and it should be perhaps 1/10 of the price today. Today's real estate residential housing price is completely out of sync with the development of the economy. This level of housing price destroys productivity, misallocates financial resources, and misincentivizes the government, misincentivizes the financial system, misincentivizes the working class. Right? Basically, it's a disaster. If let's say, if there is a military conflict between the United States and China, or maybe the United States allies in China, and if China is defeated, the blame should be put on real estate. And I think when this is understood in China, and I think if that happens, this may very well be understood in China, there will be 100 years, 200 years of depression in China, I mean, in real estate. Nobody will want to buy this motherfucking piece of shit. So that is a big risk. But I don't think, I think the government, especially in a place like China, officials don't go up to the ranks, to go through the ranks and become this top government officials without having some hubris, without having some ego. And they will absolutely, I think, believe that they can control it, that they will be able to manage it. So what I actually think will eventually happen is actually a realization of risk number 2. This most likely is what's going to happen. I think a lot of places already have issued this policy of allowing residential prices, housing prices to come down 15% per year, maximum, 15% maximum. That's their policy. Well, then that's fine. I think this basically it's a price control. In an inflationary situation, price controls will lead to shortages in goods, right? A shortage in supply. Now, in a collapsing real estate market, a price control, it basically will destroy demand because, 1 year housing price gets cut by 15%. Some people who really need it, right, may buy it. But most people will see, okay, next year will be 15% cheaper. Why should I buy it now? So they don't buy. And next year, people who really want to sell, they really want to sell, but they can only cut price by 15%. And I hope that they have cut it fast enough that someone else would want to buy it. But of course, this 15%, right? The same logic applies. It will come down and down and down. And actually, I think with this type of price control, eventually it will be the destruction of the real estate housing market. And I think this is not necessarily a bad thing, because after 10 years, the housing price could actually be lower and the market more depressed than if there were no such controls, pricing controls. Right. One last comment that I want to make in today's podcast is that a big government almost always destroys an economy. I'm not pushing for a abolition of government. I'm not pushing for anarchy. I'm not even pushing for pure libertarian economics. But you need to be sensible. With a big government that intervenes in every facet of the economy, what you produce is distorted incentives, misallocated resources, and a lot of efficiencies that will pile up, that slows the development of the economy down, that makes an economy that could be developing actually contract. And when there is a contraction of an economy, makes it very difficult to recover. And we are going to experience this effect I think in China, at least in sectors that are related to residential housing. Having said all this, I'm not saying that the Chinese economy necessarily will collapse. I think very likely that China's economy will continue and may do reasonably well indeed, because it still has a big industrial base, even though there has been a lot of misallocation of financial resources. misallocations of human resources and all kinds of other resources. Doesn't mean that just looking at the entire base of Chinese economy and looking at the relative early stage of economic development, meaning that there are still a lot of room to catch up compared to developed economies. I think there are still a lot of room for the economy to grow. It will not probably grow very fast because there will always be this big real estate sector that weighs down the economy. But that does not mean that the economy is going to collapse. Having said that, if there had been a small government, they never intervened in these sectors. They never intervened in the daily runnings of the economy. I think China's economy would be much better if there had been, less playing around with wokeism, right? This renewable energy, battery, electric bullshit. Then I think China's economy could be much better than it is today. But such is life. You don't get everything. And sometimes you have a inefficient government. What can you do? Right? What can you do? Anyway, thanks for listening. And of course, I just want to say this again. This podcast, I'm posting it on YouTube, Rumble, and Odyssey. I will also post the link to my Telegram channel in the description below. Thanks for listening and have a great day.